Welcome to Mutual Fund Family.
Log on to mutualfundfamily.com for more info.
Hello friends, welcome to the ICIci Prudential NFO webinar. Before I speak about the NFO itself, I would like to probably update you on our market view. If we see from 1st February 2018 when the budget was presented and the implementation of long-term capital gains tax on equities, there was a market correction, especially in the mid and small cap space in February and March. That has provided a good opportunity for those who are looking to invest in equities and were under-allocated to equities. As you would know, as part of the asset allocation, India is still under-invested in equities, and so would probably be your portfolio. If you look at the various sectors, given where the markets are, given the international geopolitical situation, we have a belief that consumption is a theme which will play out in India, not just in the short term, but also in the medium term. And if we look at the last 2 years specifically, consumption as a theme has underperformed cyclical sectors significantly. So in terms of an entry point, it is a very good entry point into the consumption theme. And hence the NFO, which is ICIci Prudential Bharat Consumption Series 2, provides you with an opportunity to invest in the consumption story of India. As you would all know, we are a 130 crore people country with disposable incomes increasing and a lot more people coming into employment because we are a younger nation. We are going to see an explosion in terms of our consumption needs in every aspect. Let me take it sector by sector. So which are the sectors wherein Bharat Consumption Fund Series 2 is going to invest within the consumption theme? The first is the consumer non-durable sector. So as we increase our disposable incomes, our requirements for biscuits to toothpaste, etc., is going to increase significantly. So we are going to see people moving up the chain as well in terms of better quality products, and that means that investments in companies in the formal sector within the consumer non-durable space will provide rich experience over the next 3.5 years. The next subsector is healthcare. With the kind of lifestyles which all of us are having, and it's a fast-paced life, the requirement for medicines, the requirement for healthcare is only going to increase exponentially. And most of the Indian companies have a good base in India, and also their US revenues are significantly strong. So the healthcare sector is providing an opportunity after the underperformance over the last 2 years. And like I said, if we all are going to see a growth in terms of our expenditure in medicines, it is a good way to invest in these companies and make money out of it as well. So healthcare is one more sector which we prefer and is part of the consumption basket. The third is auto. If we look at India in terms of auto, we are the fourth largest market. Almost 3 million cars are sold in India. Compare that with China, which has only 15% more population, but obviously a much higher per capita income. In China, there are 3 crore cars sold per year. So 3 crore cars in China, 3 million cars in India, that is 30 lakhs. There's a significant difference in terms of the car consumption in India. India is the fastest growing car market in the world with 8 to 9% growth. And we believe this sector, which is auto, provides a good opportunity over the next 3.5 years to participate in terms of returns. The next one is something which is very close to all of us at all points of time, which is telecom. If we see the requirement for data is expanding at such a pace that India is already the largest data market in the world. While we are used to paying very high for calls earlier, today if we see the calls are coming free, that's the global norm, and the data prices in India are also very low. That's because of the increased competition, because of newer entrants. We believe after the consolidation is over in the industry, there will be only 3 players, and that would probably also lead to a increase in data prices as we move forward. So the companies within the telecom space today are facing a problem of bad balance sheets or a problem of lower earnings because of lower prices of data. And we believe that in the next 3.5 years, that will turn around, and that provides an opportunity for us as investors as well as consumers of data to make money in the telecom sector. The next is hotels. If we see the way the change has happened earlier, probably when we used to take holidays, it used to be more to go to an aunt's place or a grandparents' place. Now we are going more and more to resorts/hotels across India and the globe. And if we see the hotel industry in India, not much investment has been made in the last 10 years in terms of expansion of capacity. So hotels as a sector also provides a good return potential over the next 3.5 years as the average room rates go up, as the occupancy rates go up. the money which these hotel companies will make will be higher, and that will get reflected in their market capitalizations or their stocks as well. The next is media and entertainment. The way we consume media has changed completely in the last 10 to 15 years. The availability of cable television, the availability of larger investments in sports. I mean, how many of us could believe that people would be spending 3,000 to 8,000 rupees to watch a game of cricket at a stadium? So the amount of money that is available for expenditure, even in the media and entertainment industry, including the price of a ticket that we pay for a movie, it's significantly higher than what we used to pay earlier. So this money is being made by the companies who own these theaters or who own the stadiums or who are franchisees of the sports leagues. And eventually, over time, we can make money in this particular sector of media and entertainment. As part of the consumption, this becomes an important sector as well. So if we look at the holistically, there are enough subsectors within the Indian consumption basket. One more which comes to mind is aviation as well. If you look at India in terms of aviation, again, the fastest growing aviation market in the world. Almost 2 crore Indians are traveling every month in aeroplanes. And today, probably it's synonymous in traveling to trains, and the prices are also as probably competitive with trains. So railways and railways and airports are increasing significantly, and we believe that airline industry also provides a significant upside in terms of return potential over the next 3.5 years. So with a significant amount of potential even in consumer durables, if you look at the white goods requirements from earlier joint families, we are becoming nuclear families. So that means multiple requirements for refrigerators, multiple televisions. Earlier, there used to be one television in a house. Now there are two, maybe three. So we are seeing an explosion in terms of requirements of white goods as well. So the companies engaged in that sector, particular sector of white goods, can also provide us a good return experience over the next 3.5 years. So each of these subsectors, while we spend on them on a regular basis, on a daily basis, or on a yearly basis, we are not probably participating, or we haven't participated in them as investors. And that's the opportunity with Bharat Consumption Fund Series 2 brings to all of you. We believe that over the next 3.5 years, this theme has the best risk, has a better return, risk-adjusted return potential than many of the other cyclical sectors, given that global geopolitics is not something which is controllable in our hands. And also in India, we have an election which is coming up in the next 1 year. Typically, it has been seen that whenever there is an election season or around the election time, there is an expenditure which the government makes to prop up consumption demand in the economy, and probably to make the consumer sentiment also look better. So the timing of this Bharat Consumption NFO is something which we like in terms of fresh investments, and we urge all of you to participate in the NFO, which ends on 26th of April 2018. It started on 12th of April 2018. And in terms of the market outlook as well, if I may say so, there are pockets in the market in terms of mid and small cap which are expensive, but there are large caps which provide good opportunity in terms of risk-adjusted return over the next 3.5 years. And to reiterate, the consumption theme with all the subsectors which I have mentioned in the earlier, they seem to be something which have the good risk-adjusted return potential over the next 3.5 years. So we look forward to your participation in the NFO. Thank you and happy investing.
ICICI Prudential Mutual Fund. Tarakki Kare. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Thanks for watching. Drop a like, leave a comment, and don't forget to subscribe Mutual Fund Family.